I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a bit of a regular guy. He's a real treat. He talks in sound bites and he knows his stuff. He's like a human computer. I'm talking about the man who runs Pento Portfolio Strategies, Michael Pento of Pentoport.com. Michael Pento, thank you for joining us today on USAWatchdog.com.
It's always a pleasure to be on with you, Greg.
Okay, you're a big-time money manager. You're a big-time financial consultant for people. You tell people how to invest, what to invest in, where to invest, when to get in, when to get out, the whole deal, gold, silver. You do everything, full spectrum. Tell me about what you think about this budget deal that just passed. A lot of people hate it. Democrats and Republicans at the pig trough love it. What's going on with this pig trough we have going?
Well, let's start at the beginning. I mean, Trump was supposed to drain the swamp, right? Now, if you look at the swamp, at the bottom of the swamp is mud, it's silt, it's muck, and it's mire. And that muck and mire is composed of individuals that reside in Goldman Sachs. Now, why would Mr. Trump drain the swamp and fill it up with 6 individuals in administration from Goldman Sachs? So that's his first big mistake. Now, this budget deal was really just another continuation of kicking the can down the road till September 30th. But they have no long-term deal in place, and there isn't going to be one, unfortunately, in my opinion. See, what we want to do as a country, now I love cutting taxes. I voted for Donald Trump. I did not want Hillary Clinton in the White House. I had a lot of hope in Donald Trump, and I still do. However, Mr. Trump was supposed to drain the swamp. He was supposed to strengthen the dollar. He was supposed to kick out Janet Yellen. And he was supposed to be a lover of the Constitution and balanced budgets. Is that what we have today? Well, all of a sudden, China is our best friend because, Melania gets along with Xi Jinping's wife. I don't understand why that's relevant, but he said that was a big hit. I mean, why isn't China a currency manipulator? How come he suddenly wants a weaker dollar? Why all of a sudden does he love debt and deficits? I got to say this to you. This is the CBO, Congressional Budget Office, saying this. We are going to have an average of $1 trillion worth of deficits over the next 10 years. Now, that assumes a lot of rosy stuff, like we're never going to have another recession over the course of the next decade. I don't think so. Now, we also have the fantasy that the Federal Reserve is going to start to do something called reverse QE, or quantitative tightening, selling their longer dated treasuries and mortgage-backed securities. So we have $1 trillion of deficits baked in because of entitlement programs, and then another $1 trillion if we have a recession. And the Fed's balance sheet being unwound is $3.5 trillion, because the figure they go down to $1 trillion or thereabouts. Say 3.5 unwound over the next several years. And then Trump wants to add on top of that a tax cut, which is $1 trillion over the next 10 years. And then if interest rates go up, and I would assume why the hell wouldn't they go up if you have the bond vigilantes woken up and say, hey, here comes a bunch of offers, then for every 1% increase in the average interest rate on the debt, that's $200 billion. Does anyone give a damn anymore about our debt and deficits? I thought that's what Trump was elected to cut. Remember, he told us that he was going to not only eliminate the deficit, but pay down the debt. I mean, come on. Where are the people in this country that care about the sustainability of the economy and the middle class? They're sleeping, Greg, and people like you are the only ones out there that are trying to wake them up.
What do you suppose would happen if they don't get a budget deal? I mean, I suspect that Trump signed this $1.1 trillion albatross and got some military spending, and he got some stuff for the Republicans, and Democrats got planned, parenthood spending and whatever else they got. But I think the real fight begins for the new budget, does it not? I mean, when you wrote a piece saying, listen, we need debt cuts, not tax cuts.
Well, isn't the goal? Well, isn't the goal? The goal for you and I are probably different libertarians that we are. I mean, don't we want to empower the private sector and starve the public sector? Isn't that what Ronald Reagan was all about? unless he had an ideology that he wanted to follow. Is that what Trump wants to do? And that's why I started this interview with Goldman Sachs. Is that what Stephen Mnuchin wants to do? Is that what Gary Cohen wants to do? Are they looking out for the middle class? Are they looking out for Joe the plumber? Remember him? Or are they looking out for yet another bailout of the banking system and another bailout for Wall Street? Well, it's a rhetorical question, but we all know the answer.
You think they're going to just do what works and what has worked in the past, and that is monetization of debt and massive manipulation and whatever? I mean, or are they running out of runway? David Stockman came out here and says, they're running out. They're just about out of tricks to pull out of the bag. Do you think this fall could be set up a time? I mean, people like big people think that this fall is going to be a rough time for Charles Netter is one of them that is forecasted this fall. If you're not positioned right, you can lose everything. What say you?
Well, I'm sorry to interrupt you. I didn't mean to step on you there, but this fall comes and goes, and I mean, if we don't have a budget deal, if we don't have a Senate bill to repeal and replace the Obamacare plan, if we don't have a tax cut, I don't even think the Wall Street wants tax reform. I mean, if we want to go from 35% to 28% on the corporate side with the pass-throughs coming along with them, and then eliminate a whole bunch of deductions, I mean, I think that's going to be mildly beneficial for the economy, but certainly doesn't justify 24 times trailing 12-month earnings per share on the S&P 500. It doesn't justify a near record total market cap to GDP. It doesn't justify a record price to sales ratio in the stock market. It doesn't justify a 0% GDP growth. I mean, the market is living in a fantasy world if they think a kind of kiss your sister, watered down, diluted, and delayed tax cut is what's going to rescue. I'll tell you what, let's be a little positive on the show. I mean, I love America, and I know you do. You're a real patriot. Why don't we do the right thing? Why don't we, like I said, why don't we reduce the rate of taxes for everybody? Why don't we pay for it by cutting spending? Simpson Bowles, bipartisan group of individuals, they had a great idea. Let's cut spending. Let's tackle entitlements. Let's try to balance the budget as much as possible. Let's try to reduce asset bubbles, the triumvirate of asset bubbles, stocks, bonds, and in real estate. Let's have a small and hopefully shallow depression last a couple of years. And then guess what? Then we'll have real estate prices that actually are affordable for first-time home buyers. How about we have a market that's not trading at 133% of the economy? How about we don't have sovereign governments borrowing trillions of dollars and getting paid to do so? How about we don't have central bank balance sheets exploding? I mean, they printed $1 trillion out of thin air, paper confetti, over the first 4 months of 2017. I mean, is that normal? Does that sound normal to anybody? Look, when is it going to be the day where Mr. Kuroda, the Bank of Japan governor, when is he going to be able to make the announcement that we're going to not continue to print and own the entire JGB market and half of the ETF market in Japan? When that happens, what's on the other side of that, Greg? I mean, I would like to be a trader in Japan and getting the phone call or hearing the announcement that Mr. Kuroda is now going to be he's not going to be buying any more JGBs, and he's probably not going to buy any more ETFs, Japanese ETFs. What do you think my reaction is going to be? Oh my God, what a watershed tsunami of sell orders you're going to get from the private sector. So we're stuck. We're stuck with these central bankers, which have taken the VIX down to single digits, 24-year low. And the reason is not because, it's not because central banks haven't solved all of our problems. It's not because we have very low debt to GDP ratios. It's not because there aren't any more asset bubbles extant. It's because the free market has been destroyed. There is no more market that is free anywhere. And whatever vestiges that are left of it are being manipulated. LIBOR, COMEX, every market on the planet is manipulated. And it's not just me saying it. Look at what the prosecutors are saying. Every market in the world is manipulated by out and out fraud and sublimated fraud by the central banks.
So, I just pretend you're a fly on the wall with the cabal, the central bankers, the big bankers. What are they afraid of? I mean, they just are so afraid of a market correction. Why are they so afraid to allow the market to correct? Why?
Well, Bernanke's new book, The Courage to Counterfeit, The Courage to Print, is now out in paperback. And I guess what they're afraid of is because their charter isn't to protect the middle class, it isn't to protect the solvency, of America. It's to protect banks. So in 2008, they had a wonderful opportunity. Maybe they could have just done a small quantitative easing program, allowed some companies to restructure and go into bankruptcy, and we would have had a small recession, depression, probably a little deeper than a recession, maybe a small depression. And then on the other side of that, we would have had viable markets. We would have had stable interest rates, stable tax rates, stable currency. We wouldn't have any bubbles. And we, but that's not what they're all about anymore. They have the hubris, and I don't know where it comes from, but these Keynesian liberals have the hubris to believe that they're like a sort of like a demigod. And they have repealed, because they're geniuses and they know much better than the market, and certainly much more than you and I, that they can repeal the business cycle. No more recessions, no more down markets. Wouldn't it be wonderful if we could all become China and we could just have a command and control economy where the currency is not liquid, it's not convertible. They have GDP targets, inflation targets, currency targets, Shanghai Stock Exchange targets, and they can control everything, and by doing so can eliminate any type of volatility or disruption. Now, if you believe that, then you're insane, and I know you don't. But if you're like me and you say there's going to be a day of reckoning, where the manipulation gets turned back to free markets. It's going to be volatile. It's going to be disruptive. There's a lot of opportunity out there, too, if you have a money manager like someone who thinks like me. But that is where we want to end up eventually. We want to have a cathartic purging of these excesses and imbalances. And that's what I'm hoping for. Let's be positive here. I don't root for anything bad to happen. It's just that for the first time in history, we're going to have bubbles that don't pop. Does that make any sense to anybody? The first time in history, we have a record level of debt, a record distortion in asset prices, a record amount of debt that's, by the way, 300% of global GDP, $230 trillion. And that's supposedly supposed to turn out just dandy. I don't believe it.
Walk me through what you think would happen if they lost control. The derivative markets.
Oh my God.
Let's get down to what are they fearful of? What would happen if they lost control? Just because they want to control the market doesn't mean the markets, doesn't mean they can control. What would happen if they lost control of the derivative market, the bond market, interest rates? What would happen? What would it look like?
I think you got to stop saying if. I think you got to say when. I think the if is not even in the question. It's a matter of when. And when that happens, you're going to have a normalization. Let's just take interest rates, for example. So in Japan, an insolvent nation, 250% debt to GDP, they have ownership, almost complete ownership of the JGB market, at least half or more of the ETF market. So, and the most pernicious part of all of this is that they actually have an inflation target. So if inflation is achieved in Japan, and they have to, and inflation, by the way, let me just tell you why I think it's not if, it's when. Because it's when central banks are successful. There's never been a central bank on the planet that hasn't been successful in creating what they want to create. And what do all central bankers want to create today? It's inflation. And when they get their inflation, what do they do? They try to pull back and reverse course. They try to turn. They believe, because they're Phillips curve liberal Keynesians, that they solved all our problems, and they believe that inflation is going to stop at 2%. It's not going to go to 2, 3, 4, 5, or even higher, much higher. So in Japan, what's going to happen is they're going to have a bond crisis. I wrote a book about it called The Coming Bond Market Crisis. When that inflation occurs, that's the big arbiter. That's going to be the cathartic mechanism. When they lose control over inflation, interest rates will mean revert. And when you have mean reversion of interest rates, that will pop real estate, stock, and by definition, the bond bubble, that's when the globe gets its massive reality check. Not if, it's when. So for example, let's take the United States. If we had to pay 5%, an average interest rate of 5%, we would be paying on the debt outstanding $1 trillion. So if you have $1 trillion debt, added to another trillion, that's $2 trillion. That doesn't count a recession. That doesn't count the Fed selling either, right? So you could have very, very easily $3 trillion annual deficits if interest rates just mean revert. Now, if that's not a truth, if that's not a true serum, that's going to shoot a very sharp spear of reality towards these bubbles and for these manipulators of assets.
So how are you telling people to protect themselves? I mean, if you've been out of the market, I mean, we just had, it's just absolutely bizarre. The S&P is at or near all-time highs, and retail sales, if you take a look at the chart, goes up this way for the S&P, and retail sales go down like this. They're closing 8,000 some odd stores this year in 2017. They closed 6,000 or so stores in 07. Why the big disconnect? I mean, I guess people still have confidence in central bankers?
Yes. So there's still an extreme amount of confidence in the fiat currency regime. There's still an extreme amount of confidence in the imminent passage of massive deficit-busting tax cuts. And that's why I say this summer, when you usually get in trouble when you predict times of things that are going to happen. Here's what I do know. I do know it's a matter of when, not if. And this is why it's important not to just have a stop clock. Some people could say, just always invest in treasuries, or always just go long the S&P 500, or just always have a diversified mix between stocks and bonds, or just always own a basket of gold stocks. We are going to swing wildly between inflation and deflationary cycles. If you can model that, if you have a very robust and powerful model, you'll be able to make money on both sides. But by the way, this is what I believe. Let's just walk you through the timeline. I think, and no one's God, and it's certainly not me, I believe that this summer is going to be a very big epiphany, a watershed moment in the summer where we all understand, Wall Street becomes aware that tax cuts are a 2018 event, and it's going to be more in the way of a very minor tax cut that's coupled with some watered down version of reform. And when that happens, and don't forget, I believe we're going to have at least one more rate hike in June. And when the rate hike occurs in June, now here, let me just walk you through this. The Federal Reserve said that they can raise rates two or three more times in 2017, and 4 more times in 2018. Now we're already at 1% of the Fed funds rate, okay? So 7 more rate hikes is going to bring the Fed funds rate to 2.75%. If the 10-year Treasury is at 2.3% and the Fed funds rate is at 2.75%, then that's by definition a very steeply inverted yield curve. And that has always been the precursor of a very sharp decrease in GDP and in asset prices. So I don't believe the Federal Reserve is going to get anywhere near their goal of 2.75% or 3% by the end of 2018. So somewhere along that way, we are going to have a recession. The Fed is going to probably invert the curve way before the end of 2018. I just proved it. Unless for some reason the 10-year yield starts to scream higher, and there's no evidence anywhere. If you look what's going on in China with their wealth management projects and their products and the surge in Shibor, the Shanghai interbank lending rate, we have a very good chance of a summer crisis in China, a summer crisis in confidence in the Fed, summer confidence in the Trump administration, a crisis of confidence. And I'm sorry if I said that wrong, but a crisis in confidence in all the things I just mentioned. So this summer could be really dangerous. And if I could be wrong. I could be wrong. I've been wrong in the past. But I can tell you, is this the time you want to start top ticking a bubble? I mean, you should not be fighting the Federal Reserve here. We have very stretched asset prices by any honest arbiter, any real metric. We are way stretched in the asset bubbles that are extant in stocks, bonds, and real estate. Anybody with any kind of an ounce of honesty will tell you that. So this is a time to be very cautious and get ready for that big opportunity. That's what I'm doing here at Pento Board. The big opportunity is when the Fed realizes that they will never be able to raise rates 7 more times between now and the end of 2018. They're lucky if they get 2 more in. And that's when the dollar really falls, and that's when you're going to have a big spike in the price of gold.
I was in the mainstream press. I was at ABC and CNN, and just what I see the press doing. I mean, before the election, they wrote op-ed pieces in the New York Times, the USA Today. It was the reporters' own volition to stop Trump, and it was their duty to stop Trump. Well, now they are basically continuing that thing by destroying Trump. Doesn't that shake the way the mainstream press is actually trying to destroy? They lie, they leave out facts. I'm sorry, I was a member of their team. And isn't that bad for the economy, for the psyche of America, to have them be so one-sided? They're like propaganda media.
Greg, I wish I knew you back when you worked for CNN. I mean, I'm 53 years old. When I was a kid, you turned on the media and you got the news. I don't know where you go. Where do you go anymore to get the news? You get just one big op-ed editorial page. And every piece of news you get is tilted and slanted. So you turn on CNN and you see Trump is really just a Russian puppet. And if you turn on Fox, it's all about what Trump is doing with Comey opens the door to have Hillary Clinton put back in jail. I mean, I think it's because Americans have been so dumbed down over the years, or at least that's the goal of government, is to dumb them down, is that the media thinks they need an interpretation to be spoon-fed. Well, here's the news, and let me tell you what that really means, because you're too stupid to make your own judgment. And I know you never did that, and I'm pining. I'm hankering for where I could just, other than places. And this is one of the reasons why you're so popular, Greg, is because people, you have people on like me who just give you their objective opinion without a whole bunch of stuff to sell, without a whole huge agenda. In fact, one of my sayings, my slogans, is monikers. Hey, it's advice without an agenda. My only agenda here really is to make money. And other than that, I don't care. Like I said, I voted for Trump, but he's not my favorite. He scares me. I hope he loses his Twitter account. That's what I hope.
All right. Well, listen, Michael Pento, thanks for joining us today on USAWatchdog.com. Of course, the website, pentoport.com. Michael Pento, a money manager, analyst extraordinaire. Thank you for joining us today on USAWatchdog.com.
Always a pleasure, Greg.